Hey everyone, it's Juan here, president of Sage Real Estate, and today I'm going to give you the 2024 forecast. I'm going to talk a little bit about what happened in 2023 and what you could expect, how you could position yourself to win in this coming year. So today, February 2024, and let's talk about what happened in the Fourplex Market in the city of Long Beach. A lot of you know that we specialize in selling multifamily commercial buildings in Long Beach, and one of the things that we sell a lot of is fourplexes. And so I want to show you some of the data that we're going to be highlighting for you. Now, what we know is in 2023, something happened. Interest rates went significantly up, where early on in 2022, interest rates were, under 3, 2.75, 3, hovering around there. They've since doubled. And I know you already know that, but how did that impact the market? So I'm going to show you guys a couple things. Again, Fourplex Market in Long Beach alone. In 2021, there was 119 fourplexes that sold. Now, for some of you watching, of course, we had that market share on those sales there, meaning that we were mostly involved from a brokerage perspective, representing sellers or buyers when it comes to fourplexes. 119 in 2021. We saw a decrease down to 70 fourplex sales in 2022. And so in 2023, where the interest rates were in the last 15 years all-time high, sales went down to 48. So if someone asks me, how's the fourplex market? I would have to say that sales are down. That would leave you the impression that, oh my gosh, this is a bad time to sell. Sales are down. But not exactly. Let's talk about the average fourplex price in the city of Long Beach. I'll tell you that in 2021, we had the average price back then was $1,319,000. We had a slight uptick in 2022, $1,370,000. Now, although I just finished telling you that sales are down significantly from the prior years, what happened to the average sales price? Once again, it ticked up. So right now, we're literally right under 1.4 million. So for anyone who attends my meetups, for anyone who comes to our meet and greets, you know that for the most part, when I talk about the fourplexes in Long Beach, I'll tell you that the average sales price is 1.4 million. The data has given us that. So a couple things. If you are a owner of a fourplex, sales are down. You might think that that's bad, but also don't forget that the average sales price is up. Now, it's possible that you have a fourplex, and depending in the location, depending on the income, depending on the bedroom, bathroom count, you might be below the average, the 1.4. You could certainly be above, because in 2023, we had some fourplexes sell over 2 million. Now, we also had some sell down below 800,000. So it all kind of depends. Condition, income, location, bedroom count, square footage, garages, all of that factors in. And so a lot of times people will call me and say, what's my fourplex worth? And some people have the impression that I go onto Zillow and I plug in the address and Zillow gives me the address, gives me the value. And that couldn't be further from the truth. I never rely on Zillow. Why? You own an income producing property. Do you think Zillow knows your bedroom counts? Do you think Zillow knows your rents? Now, if you've been watching my channel, you know that I talk about the higher the rent, the higher the value. Now, if Zillow doesn't know your rents, how could it know your value? All it's doing is using your square footage, which may or may not be properly reflected, right? And it's using the square footage to come up with some type of average sales price for your area, never factoring in income. So for those watching, I almost warn you, if you own rental income, please do not use Zillow. In fact, if you want to use Zillow, call me and let's talk about that Zillow value, and I'll show you the real value, because I'm going to ask you the questions that Zillow's not asking you. Zillow's not asking you if any of the units could be delivered vacant. That impacts the value of a property. Zillow's not asking you the rents and the expenses and the important things that anyone in our industry would be needing to determine a valuation on your specific building. So again, if you're an owner, if you're thinking of what's my property worth, feel free to reach out. No pressure. But by no means do I want you to go to Zillow, and because I don't believe in it. I don't believe that that is the best place to go find a value. So let me go on to days on market. Now, what I'll tell you is in 2023, it took 64 days on market. So if someone calls me and says, I'm interested in selling, how long do you think it's going to take? Well, on average, most fourplexes are on the market 64 days. And so again, let me summarize what happened in 2023. Sales are down significantly. Average sales price is up. That's a plus. The one negative is that it's taken us a longer time, but not that much longer. I mean, the prior year, it was 56 days, and in 2021, it was 45 days. And so really good data to have. And by the way, nobody, and I mean nobody, is tracking this data. We've made it a point to be the one company that specializes in the one product type that some people just simply don't care about, and that's the fourplex market. And so there you have it. That's your fourplex market update in the city of Long Beach. I want you to stay tuned in because I'm going to talk about what's happening in the 5+ market, okay? Because right now, I'll tell you this. You have two different worlds. You have the fourplex market that performs a certain way, and the 5+ market is going to be completely differently. And I'm going to get into some of the dynamics on why that is. So let's hop right into that. In this next graph, I want you to see something very, very important. This data that I'm showing you, it's the activity of a cap rate. What's a cap rate? Cap rate is a measurement that investors use to determine value. For those of you who've been watching our channel, you know that cap rate takes here's a brief summary. We take the gross rents, the annual gross rents, less the operating expenses. The operating expenses are the expenses that you, or anybody else who owns this property, those expenses are going to be true to that property. Those are operating expenses. Insurance, property taxes, maintenance, utility cost, those types of stuff, property management. That's going to be, no matter who owns it, these are going to be the expenses that belong to that property. So we take the annual gross income, less the expenses, we end up what's known as the net operating income, okay, what we call NOI. There's a ratio. We take that NOI divided by the price that the building sells, and we come up with a cap rate, okay? Another way to look at it is the cap rate would be the rate of return if someone bought the property cash. Those two definitions are both true, okay? What I want to show you in this graph is Q1 of 2021, we saw the cap rates go down. What happens when cap rates go down? Values go up. It's an inverse relationship, okay? But once we start getting past, so anyone who's owning real estate, 5+ units in 2021, 2022, you saw cap rates going down. So we could all assume values are going up. So everyone in this time period is very happy. They're making money, a lot of money. Now we notice that Q1 of 2023, we start seeing this uptick. In fact, an uncontrollable uptick. So the cap rate hit its low in Long Beach at about just under 4.2%, okay? So that tells me that if an investor buys a property in Long Beach, the average cap rate's 4.2, and that was Q1. Now, why is it that at Q1 it started going up? Because in that first quarter is when the interest rates started increasing out of control. In fact, no one anticipated that it was going to increase this high. And so what we see here is this straight climb up to the top. I mean, we go from 4.2%, 4.5%, 4.75, 5 cap. We are just hovering at just 5.4% cap rate. Now, I just finished telling you cap rate goes down, values go up. What's happening now? The reverse. Cap rate is going up, values are going down. So when I tell you that, a lot of times people will come to me and say, how's the market in Long Beach, Juan? You're the multifamily guy. And that's a true statement. But that's a hard question because I need to say, well, are we talking about 2, 3, and 4 unit buildings? Or are we talking about 5, 6, 7, 8, 12, 20 unit buildings because they're performing differently? Earlier in the video, I talked about that the average fourplex sales price is up. That's a fact. That's not what I'm going to say if you own 5+ units. So if you have a 5-unit building, it's probably worth less than it was last year. For sure. Why? Well, the cap rates have gone up. Why? Because the interest rates have gone up. Now, there's a couple different things. A lot of the reasons why I was incentivizing people to buy fourplexes first was because in the fourplex market, you traditionally typically get a 30-year mortgage, and you're going to cap your biggest expense with a 4-unit building, as you will with a 2 and a 3-unit building. Those are all the same. Now, in this category, interest rates are fluctuating. So when you're getting into what they call commercial type deals, which is 5 units and above, that interest rate is changing. It's changing every 5, 7, or 10 years, depending on the loan that you signed up for. And because of that change, we're seeing a dramatic shift. Cap rates increasing, values are decreasing. Very important thing to know. Here's another graph that I want to show you. It's a 3-year comparison of sales volume just here in Long Beach. A lot of times you're going to see market updates and they're very high level. Nationwide, here's what's happening. LA County, here's what's happening. But if you've been watching my channel, you know that we're specialized to the market here in Long Beach. And here's what I want to show you, because it's very, very important. This is sales volume, okay? Because another thing that people ask me is, how's the market? And then if someone says, and if I ask them, well, do you want to know about fourplexes or 5plexes? And they say 5 and above. The green line on this graph is for 2021. The blue line is for 2022. So I'm not seeing this massive. So what I want to show you is that back then, from a volume perspective, we were in the 500, 600 million sales volume in all the city of Long Beach. Well, this last year, 2023, we're barely slightly above 200. That's a massive decrease, more than 70% in the city of Long Beach. Okay, so as I wrap up with the sales volume is that in the 5+ unit market, we have values decreasing and we have sales volume significantly decreasing. Okay, so that's a problem. I think that if you're a seller and you have an 8-unit building here in Long Beach, you are contacting someone like me or someone that sells multifamily in Long Beach. And what you're going to find out is right now we're chasing a cap rate, and the cap rate is increasing. Okay, so the cap rate is increasing. And in order for you to stand out, you need to compete with these other cap rates. Now, in 2021, where the cap rates were in the low 4s, well, that gave you this terrific value. But now we're above 5%. There are nice 8 and 12 unit buildings here, Bluff Park, Belmont Shore, offering a 5% cap. So that's going to be very competitive. So if anyone is entering the market, and you might need to enter the market, why would you need to enter the market? Is that your loan might be coming due? Is that your interest rate at whatever you signed up for 5 years ago is now coming due, or it's about to adjust, and it's going to put a little pressure on you? So that's kind of what I see. So I represent both buyers and sellers. And so from a seller perspective, I think it's going to be very competitive for you because there's going to be a lot of competition and people fighting for offering a higher cap rate, driving your prices down. So not doom and gloom in Long Beach, but also from a buyer perspective, if I'm looking at real estate, there's going to be tremendous value in the 5+ market. Okay. Now, when it comes to financing, the 5+ market will require that you put a bigger down payment. Now, traditionally, you were able to get, say, an 8-unit building. In most cases, if it met the required debt coverage ratio, typically would be between 30-40%. Well, now a lot of these properties that are hitting the market, when we run it through the debt coverage ratio, it's requiring 50%, 60%, and 70%. And for that reason, a lot of properties aren't moving. And so if you're watching this video, if you're an investor, if you have access to bigger down payments, you're going to need it. The deals are going to be good, but you're going to be investing a lot more of your funds to be able to pull that off. So another measurement that we like to follow is what we call price per unit. And oftentimes when we list a property, investors and brokers and appraisers want to know, well, what's the price per unit, the price per door, okay? And in this next graph, what I want to show you is that in the 5+ market, that price per unit is falling. Again, giving me further support to prove to you that when the price per unit drops, the sales price is going to drop. And so we've had this, in our peak, we were well above $320,000 a door, which that would be the average. That means that if you're out there buying a 12-unit building and something is at around $300,000 a door, I would tell you that that's the going rate for that. Well, now we're seeing a decrease where now we're about $260,000 a door, okay? And so that means that there's just less demand at this level from investors. The value has been hit in multiple ways: the price per unit, the cap rate. And so some sellers are going to be in a situation where they have to sell. And if that's you, I encourage you to give us a call and let's discuss all of your options. If you're an investor and you're watching this video and you're like, how could I take advantage of what's happening, right? It's an opportune time for certain investors to get into the market. A lot of these buildings that are being sold, they've gone through major renovations, new roofs, new windows, copper plumbing upgrades, electrical upgrades. Their loan is about to adjust. I'm not saying that those people in that situation that find themselves motivated to sell are going to lose money. They're still going to make money, but the property is going to be offered to you, in most cases, more renovated than it was before, higher rents than ever before, with a higher cap rate. It's a win-win for any new investor. So there you have it. The fourplex market, the 5+ market, they're performing differently. So it all depends on where you're at. If you're in the fourplex market and you want to get started, give us a call and let's have a discussion on what we could do to position you to get your first or your fourth fourplex. Or if you're someone who has a significant money down payment and wants to chase the bigger opportunities, because that's, after watching this video, you realize that that's where the good deals are going to be, I invite you to reach out to me as well. So thank you for watching. Make sure to like, comment, and subscribe. That's all for now.